charts. I don't see anything yet. Okay. Thank you, Gabor. Thank you so much. That's great. So let me start on recording. Good morning, everyone. Welcome to our live daily room here, live trading room with Admiral Markets. So glad that you could join us on today, the 20th of June, on Thursday, 2013, after a very lively FOMC meeting yesterday with a lot of volatility that was brought into the market, a lot of U.S. dollar strength that was brought into the market. So quite interesting there. But before we look at that, we're of course going to take a look at our PowerPoint quickly, and then we'll move on from there. All right. So just as you are aware of, as always, global financial markets is considered high risk, and trading on them is considered high risk. Please be aware of that, and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information and advice on that. And this video and or webinar, live webinar, is for educational purposes only. So thank you so much for your attention on that one. Today is our last session of the week, and we'll be back next week, Tuesday, for the last week of June. Always a bit risk to have the first account cuts as no real take a look. Take a look at rooms thing to do. We start our usual take this down and here's analytics as well. Here we have the thing for time. This is maybe yes. Okay. Investment, right? So we have the French PMI later on as well, and we have pound retail sales. That's high impact, 4 of them. And then later in the day we have USD news on jobless claims and existing home sales. And we have Eurogroup meetings as well, apparently. Let's see. I don't see it here, but apparently they're having meetings. So that always can bring, adverse effects when maybe something is released regarding the news. Okay. Anyhow, let's move on. And by coincidence, I have it on the yen. One of the reasons is that it's actually breaking a trend line that I have on my chart. It stopped at the trend line right here, kind of like made a pause there for several hours, and now it's pushing through, hooked back, and pushed again. So that's showing a lot of strength, to be honest. There is some resistance at these fibs at 786, 886. I mean, those are still potential resistances. Potential, always potential, you never know. But most often than not, currency does pause at them at least. So that's not too far away, but still 50, 60 pips. But the interesting part about it is what I think is that what I was already, I'm not sure if I said it here, but what I told some friends, at least for sure I remember, is that some trading buddies of mine, is that what I'm really looking for regarding upside is a break of the trend line like what we're having right now, and then a hook back like this, and I'll take the next break because then we're already in an uptrend. Anything really under this trend line, I wasn't really too keen on going long. You know, you never know. Something like this looks very bearish in a way, right? Because you have an impulse, and that is definitely true. If we would have broken this trend line, I was very interested in selling it. But that's why it's good to wait for a break, because the thing is that these things that look bearish sometimes can actually turn in an uptrend, because they use the higher highs and higher lows, or especially higher lows in this case, as a building block, basically as a building mechanism to, you know, to find support, and eventually, boom, it cracks. And you know, I was maybe even tempted above this high, because then it could be like a ascending wedge in a way like this, right? And there was some space to the trend line, but because the trend line was not, you know, was relatively close by for me, considering the risk, at least, it was more like, if you look at the risk here and the reward, it was more or less equal to each other, so I wasn't that interested in that. But then again, here we get a break, so that would have made it a bit sweeter. But you know, anticipating a break is always a bit risky business, so not my preferred method as well. So I just skipped this personally. I don't mind to skip trades like that. I don't think it's that great either. So did break, respected the trend line, and then keeps on pushing. So quite a expected move. And now I'm interested, more interested in the upside, but not totally yet. I want to see first a corrective that isn't too impulsive, and then I'll take the break. If it breaks, I will take it to the upside. That was my plan already from here. All right. So yeah, but interesting. I just wanted to show you this yen because, like, well, I was on the yen anyhow by coincidence, but it's interesting to me how kind of movement like this can seem bearish, and all of a sudden you do get that, you know, other upside. In fact, very interesting how that whole structure then becomes actually support. And in some cases, when you get the break, of course, then it's just a huge bear flag, and you get a big continuation. But that's what happens with 4-hour charts. When you really get massive consolidations like that, instead of bear flags, they're really like new trend reversals in a way. That does happen on 4-hour charts, especially. All right. Let's see. It's basically more or less like a wave 1, 2, 1, 2, and this is the wave 3. For those of you who like added wave, so that's always possible. Let's move on to the Aussie. The Aussie broke yesterday this trend line I was writing about. I wrote an article saying, I think I mentioned it here as well, that I am pretty sure I mentioned it here. To be honest, forgot exactly what I said, but I remember that I said that I'm expecting a push up to this trend line, and then a bounce, and then it depends if we get a bounce and break, or if we get a bounce and continuation. Because of the FMC, we didn't really have this hook back where I have the blue circle here. That didn't really happen, but otherwise, you know, it more or less happened what I expected, and that's what I wrote in my article, that I'm either looking for a break here to the upside, which is not that interesting because it is counter trend still, this upside, up to maybe this target and this huge resistance area. That was key, or a break of this trend line for that downside continuation, and that's what's happening right now. You can see how multiple trend lines nicely give those breaks to the downside. That's why gain lines are definitely worth to look at, and that's on my list actually of learning and development, because that's not really material that I have done intensive research on, so that's on my list actually. But yeah, I'm happy that the Aussie cracked yesterday because I had a prediction on April 18th in my article saying Aussie will be at 92.30 by mid-June, and now it hit 92.30. It's actually 92.27, and it's the 20th of June, which by my definition still qualifies as mid-June, although I was aiming for 15th of June, of course, so I missed it in a way by 5 days, but otherwise I'm very happy with that prediction. And I traded it as well, although I didn't hang on to the 92.30, which in a way is a pity, and I wish I did, because that would have been 1,000 pip per day for me. And I wish I had a bit more patience on that, but still. 400 pips is not that bad either, but I could have gotten more because I already expected this to happen. But that's a different story. So that's also a learning lesson for me, to be a bit more patient. But still, prediction, was very happy with that. The thing is that now, for me, when it moves this much in one shot, I'm not interested in it, to be honest. I mean, 92.30 is let me go to the week chart and get rid of all these indicators or these objects quickly. Good. The reason why I had 92.30 as my objective, April the 18th, was because of this target. And we're there right now, so you can understand why I wouldn't be wanting to short it right at the target. Now we might push through it, that's fine, but I don't really care, to be honest. I'd rather wait for, and this target, this fib is also maybe important. All right, you can see the reason why I had this prediction was clearly we had a impulse down here. All after that was just basically a correction, and now we get the continuation. All right, that's how I also predicted the fall of gold early on and the rise of a yen. So those were all accurate, just like this Aussie as well, and also the euro odd, pound odd. I all had right. So it's been a good year for me, but that's why I'm not interested now. I have to admit that looking at the impulse that we have now, again, yesterday, just really solidifies the whole bearishness. Even although I was a major big bear here on the Aussie, it's even more bearish than I expected. Can't imagine. And I was already a big bear, so that kind of just, I guess, shows how bearish it is. Yeah, so this thing could really, someone asked me how far it could go. Looking at the impulse that we get now again, we're really, I wouldn't be surprised that end of June, yeah, beginning July somewhere, I think that 90, 89 seems quite conservative. I wouldn't see why all of a sudden we wouldn't reach those numbers anymore. Looking at the momentum, I don't see why not, really. And it could push even more, to be honest. I think it's quite conservative still. Who knows? It really could go to this 88, 618 target, or even to the 83. Who knows? Because trends can really push on for long. All right, so anyhow, with the more to the intermediate or immediate future, I should say. Let me get rid of these fibs first. Let's see. Yeah, key was this low as well, right? Because that was the weekly low, by the way, so that's broken. So resistance is really, really far away, and here, this upside becoming, this was definitely key resistance because of that daily high, right? Absolutely. So let's see. For our chart, beautiful breaks of these trend lines, right? Awesome stuff. What I would be looking for is more of a correction like this and a break, to be honest, because if you look at the movement it made in one shot, it's all the way from 95.60-ish. Now it's at 92.30. That's more than 300 pips till the last resistance on the 1 hour chart. Now you might say, how about this? But that's not really, to me, a major resistance. I mean, it is the bottom break here. That's true. But it would have to push a lot further down for me to consider this bottom really a major resistance. It is a small resistance. I'm sure if we go up here, we might pause a bit like this, but it's nothing substantial for me. So what I want to see is something like that before I take it. All right. Otherwise, the reason is that if you short it in here, and even if you put your stop loss here, here of course is crazy. Even if you put it here, which is really the only resistance I can think of, it's still a 100 pip risk. And you know, what is the potential left in downside at this moment? I have grave doubts that this is going to fall all the way to 89 or even 91 without giving a bit of retrace. If it does, fine. I don't care. I'm not interested in it. You know, that's my thinking. I don't think that after such a move down, the market always moves in impulses, corrections, impulses, corrections, impulses, corrections. So after an impulse, I'm automatically expecting a correction. And it could push down 50 pips. It could push down 100. It would need a 100 pip move just to get a one-to-one using a very iffy-ish 1 hour resistance spot. That's no reward to risk for me. So it makes no sense in my point of view. Does everyone see what I mean? That's the problem actually on all these euros and pounds as well. Just want to make sure, yeah, Kaylin understands. Good. If you don't, that's fine. I don't mind if you don't, but if you disagree. But for me, there's no. Just want to show you my point of view. For me, there's no balance in this, no potential to make any good trade here. So, no, I have no need to trade it. Let me say it this way. Now, the thing is that I think why maybe some people would have the need to trade it has to do a bit with psychology, I think, because the temptation to think now, I think after such a big move as yesterday, as the FOMC is that people are cautious most of the time before the FOMC, which is a good thing, by the way, because you never know which way this thing rocks. I had no clue. I could have seen an impulse in both ways, as I said yesterday. I could have seen the USD bouncing very impulsively, or USD really making one more down move and then closing and reversing, for example. You know, if we looked at the US dollar index, it was at a bouncing spot, but it had some space to the downside, so I could easily see that fall and then closing reverse to the upside off that trend line bounce, or an impulse to the upside. That's what happened yesterday, right? An impulse to the upside. So on the dollar. So really, you know, always wise to be cautious with the FOMC. What I think what happens then is that people are sometimes, not saying that any of you are like that here, but in some cases people would be maybe tempted to think that they missed some pips, you know, movement in the FOMC. Maybe you actually caught some pips, I don't know. But my goal is that the tendency is to think that some people miss the trade, some people miss the pips, get annoyed by that, and want to compensate that by taking an iffy trade here just because, you know, they missed maybe this Aussie downside and they think, oh, such a pity, and are trying to compensate that by taking it now. You know? So revenge trading, that's quite common, and I think that anyone who's interested in this could be doing that. In my opinion, unless you have some strategy that's especially geared towards this, of course, that's a different story. Let's see. This is the pound. dollar, and the pound dollar 15 EMA 89 EMA is pointed downwards, and the zone between 5 and 7 is here. So that's the London Open trade, by the way, remember. So that zone hasn't been broken during Europe, finally, because of late we see a lot of breaks in Europe, actually, right, before London Open. And this hasn't happened yet on the London Open trade, right? So we don't have a break yet, but then again, the 15, right, it's a 50-minute world. The 15 EMA, 89 EMA on the 50-minute world is pointed down. So only interested in the down break. But that doesn't look like it's happening right now. It's pushing up, so will be only valid for the first hour and 5 minutes. But I'm not too sure after yesterday if it's going to break, to be honest. But let's see. Not too big of a fan of it today. Normally I would definitely, but after the FOMC, there could be some space to the 50 fib. If you put a fib on this entire up move, there's still some space to the 50 fib, right? So that's at 153.85. That's like 40 pips difference between the low we have currently, which is more than enough. So in that regard, a downside break would have probably enough space to actually materialize. So let's see. Yesterday, definitely the pound at a talking spot. For me, I know a trader who already actually told me after our session that he took a short. Well, actually, we were looking at it here, right? I was looking for a break here. The fellow I know took a short here after a break of this low. That's just one of his strategies. That happened after our class. Got a pretty big hook back. But then indeed the FOMC pushing that forward. For me personally, this was a bit early short. For me, this was a key bottom, the 4-hour world right in here. That was a key bottom, in my opinion. All right, because that was the fractal below this moving average. So now, for me, this is definitely our downtrend. Not only that, do we have a lower low, but we have that lower high here. And that was confirmed when we broke that level. So that's why, for me, the green line here was key, because then I know that we have a lower high. Okay, so that's how I approach the trend, basically. So I'm interested in shorts, but now, contrary to yesterday where I was still looking for longs because it was still above, and a break above this high would have been interesting for me. I wasn't interested in this break because I needed a bit more candles to the upside here. First of all, I didn't like this break of this low, and I wanted to push one more push up here like this. Then I would have been maybe more interested. Either yesterday right away before breaking this low, or a better break, which didn't happen actually. So let's see. So I'm bearish now. We didn't get yesterday's break, right? I had a pending order there, and definitely at a key talking spot here, right? And we didn't break up, but we broke down. So here too, just like the Aussie, preferably on a 1-hour chart, looking for a correction, and I'll take the next sell to the downside. I'm always focused more on these medium-sized moves, right? I'm always focused more on this movement, catching this movement, not so much catching the first movement. All right, I'm always focused on the 80% of the middle, not necessarily the first 20%. So here too, not focused on the first 20%. All right, also not focused on really catching reversals here. I'm sure there are plenty of people who try to short it, and probably 90% of them failed actually to catch it, even though they were geared towards catching it. That's how it works. Not difficult to catch the turning spot. So that's my task now, with the trend trader, is to look for that correction and take the next break. These fibs, in my opinion, are targets, not levels I'm necessarily looking to go long or looking to trade. But I still have that fib on because I'm just taking a sip of tea there, because of the following. Let's see. The reason is that while I'm still cautious with those fibs, although I don't want to trade it because I'm not trading those fibs, right? The reason is because I'm trading a 4-hour trend, not a week or day trend. The reason is we have this downside impulse, right? And then we had this correction. Then we had another downside. And I'm sure that many people, upon this break, were thinking that this is downside, massive downside continuation of the first downside. And I was really warning here in our trading room as well, right? Our here at Admiral Markets, is that that doesn't have to be. It's really not. It could be possible, but there's definitely a potential of a bounce at these fibs, and then the whole structure gets expanded up to the 618 fib, which we exactly hit to the pip. All right. The same thing is now valid for this part. What can happen, and a lot of traders probably who don't know any wave theory or don't know resistance or don't know fibs, really, I'm sure that there are really a few out there, or probably more, that expected this downside break and really got totally whacked here and totally surprised about this upside. I'm sure. All right, just not anticipating that potential. All right, market is not that simple, but actually, if you know about a few concepts, it becomes simpler. I'll put this fib on, and you can see on this, somehow on this chart we didn't hit the 618. I don't know why. Some charts sometimes are a bit differently. On my other chart, it hit the 618 to the pip, but anyhow, here too it's just a 20 pip difference. So for me, even if it comes within 20 pips or 30 pips, especially on the day chart, that's still a hit. All right, so 618 hit, but back to my point is that the reason why these fibs are still important is for the same reason. We could see an expansion of this last move up, and it could become something like this. And then the last move up could be a 3-wave in its own. So the last third wave becomes 3 waves as well. It is possible. Just like people maybe who didn't expect this turn might not expect this one. It doesn't have to be, though. It could be that this upside was all the correction and its downside. But it could also be this, and the last part is a 3-wave correction in its own as well. And that's what we're doing now then, this last part, to these, for example, 786 fib and the 618 target. That's why I am bearish now, but with bearish with how do you call it? With I'm lost the word here. With realism, with realistic expectations that the 50, 618 are still potential support areas, and I don't want to short right 20 pips or 15 pips or 5 pips below, right in front of the 618. Well, that could be the bouncing spot for that upside. So yes, bearish, but at a good spot, far away from these potential supports. That's how I'm going to trade it. All right, let's take a look at the 4-hour AO. Oh, it's not here. Here it is. So that's going to be interesting because we did have a very strong AO on the pound. It was just such a massive move up that I would think, oh, probably what's going to happen is some correction, a weak correction, a break. I'm interested in a break, probably to the 50 fib here. Let me move the chart up a bit like this. Probably to the 50 fib, like that. And I would expect the 50 bounce, to be honest. That's my bias at the moment. I should actually use the other way, the colors. This, then downside. I'm interested in that downside. Wouldn't be surprised to see a bounce though there. And either we get a small bounce and one more fall to the 618, and then the bounce, or we get a bounce, a bigger bounce immediately, and then we see something like this. And upside continuation. All right, so definitely that would be the upside scenario if we go to the 786 fib. If not, then we just continue like this, and most likely all of these fibs will give a bounce. Not necessarily all of them, but most will, and we just keep on moving down. Right. So that's my approach to tackling this this currency. Let's see, anything else I want to mention? Well, that's a good point, actually, Caitlin. We'll take a look at the euro, but that's also one of those things where maybe I still have a slight expectation of higher upside, although I'll just follow the price where it wants to go, right? In fact, but could have a slight. Why my slight preference is still a higher correction is because indeed we are having a very high AO here on the 4-hour chart, and if we bottom out here, we'll probably have hidden bullish divergence between these bottoms and the next bottom. Indeed. The thing is that this was quite a rocker to the downside, therefore one more push down I think is likely. And then I think the 50 will be the bouncing spot, but it could be the 618 too. That's my personal bias, but I didn't talk about my bias yet. I just wanted to talk about facts and potential possibilities. Now if I had to choose between those two, I would think that it's a 50 bounce up to this 786 is what I expect. But let's see. I'll just follow the price where it wants to go. But indeed, you have a good point there. I like it. And looking at the impulse, the thing is that we could even start making a wedge here in a way. Something like this is also possible. And then, we could break either way, but my bias would be a break to the upside of a wedge like that. That's also possible. But here too, not interested really in trading it at the moment. All right, I'm interested in trading from here under this fractal downwards or above there, above here, above here, below here, but with caution at fibs. Let's take a look at the euro. Here it is. Euro is a bit different. Euro is a bit different because it didn't break last week's low yet. The pound and Aussie did. US yen also didn't break the low, the high of last week. Sorry, and euro didn't break the low. So all this could be is just a retracement of last week yet still in the case of euro. And euro has shown most strength versus the pound, versus the Aussie, probably against New Zealand too, I think. Than others have against the dollar. a bit different there, although it did make a good fall, right? We have daily movement. What I said yesterday also on this euro, just to emphasize, is yesterday's high. Remember that? That I said that high and low are always important. Well, look at that. Double top, and on the day chart, on the 1 hour chart, 4 hour chart is double top. On the day chart, it's a respect of the highs. And for those of you who watched the support and resistance webinar that Toronto and I did, right? I was talking about how many times the highs and lows are actually on the chart, on the day chart, how many times those don't get broken. Eventually they do. This is a classical example why I didn't want to touch the euro yesterday before it broke Tuesday's high. And you can see why now in retrospect. I was so cautious with that. All right? Exactly to the pip, and went down. So personally, I wasn't interested in that downside because I'm not trading that way. If you are looking for reversals and you managed to catch it, I congratulate you. But I was looking for a break to the upside, but only above Tuesday's high, which didn't happen. Right? We just stayed the whole day, didn't go anywhere the whole day, just a range day within a 30 pip range in anticipation of FOMC, and really didn't do a single zilch, nothing, nada, niente, nothing. And that's why, for me, sometimes intraday trading on days like this, sometimes it works well, but if you take multiple positions in a range like this, within that zone, that's kind of wacky. You could lose money there. Unless you're so gifted to take the tops and bottoms and sell it and short it in that range, then maybe you made money, but it's very difficult. But that's why those days are always a bit tricky for intraday traders like FOMC. All right? That's why it's a bit tricky. Let's see. So this support level is still important for me. And I could put back that fib. Those could be support levels, right? We can see that the market stopped at the 618 for 8 hours, 2 4-hour candles, right at the 618. But we only got a small bounce, 40 pips. We blasted through those others. That's because of the FOMC meeting. So maybe the next one could be the 786. Maybe. Doesn't have to be. But I do have it on my chart because I don't want to go short, right, or right. I don't want to go long at there or short. I'm neutral here at the moment till I see more information, basically. But let me take a look at the euro dollar on this chart. After such a massive move up, let's see, the day chart is telling me that this up move I don't think is finished yet. If we look at these tops compared to these tops, there's nice confluence here. All right, so eventually one more upside I think is going to happen on this euro dollar. But I will trade it. If we break this low, I will trade it down. And if we make a move up and get a lower high here and then move down, I'm trading it as well. So that's when I'm shorting it. I would only go long if we kind of make something like an up, down, and then do this, then I'll trade it up again. So I'm in a waiting mode here. But despite the fact that I would trade it down if we get that lower high, or if we get lower lows, etc., because that's what we don't have yet. This is still a correction of this upside here. You see that high? We still have higher highs, higher lows. We don't have lower lows, lower highs. So this is still a retracement. Unless we break this low or we make a higher, lower high, that's what it is, in my opinion. Now, if we do get that, then I will trade it to the downside. But here too, I'll be very careful of this fib, because what could happen is that we're just retracing this fib and bounce it to 618 for upside. And looking at the AO, that is a realistic possibility. Once again, it doesn't have to be. It could be all of the upside that we see. We went to the 272 target, as you can see, off the 886 fib here, right to the 272 target. We, yeah, well, we didn't stop at this fib, kind of halfway we were. So that's a bit iffy, but still maybe a 618 bounce. Extended a bit above that. So it could be downside all the way to parity. Who knows? So I'm going to, again, just like the euro, treat it with realism. And although the pound is a bit different, it's already ready for shorts upon retracement. The euro, not yet, in my opinion. The euro would have to make a hook back, and then I'll be ready to short it. But with caution at these fibs, because of the daily AO, that could send this one higher again. What could happen is that we see the AO go back to the zero line, like this, and then bounce off to 50 when this is at the zero line, and then we bounce. Kaylin is asking if we can long here for a target at 134. I wouldn't do it personally, but who knows? You know, the thing is that you in fact can trade anything at any time, right? What would be the reason for the trade, Kaylin, if I may ask? Maybe that would give me more understanding of the idea. Just let me know what your the reason for. Are you looking at stochastic oversold, or are you waiting for a 786 bounce, so a bit lower, or do you want to take it right in here? Then I have a better idea what you're thinking. In the meantime that you're writing your answer, maybe, to me, it doesn't make sense, to be honest, at the moment, but it could work well. That's why I said that you can, in fact, trade everything anywhere, because, basically, you could, right? At any point, you could go long or short, but that's why we have trade plans, of course, to filter the market action, because there's so much market action, there's so much going on, so many currencies, so many movements, up, down, candlesticks, fibs, supply, demand, resistance, support, pivot points. You could look at so many things. So we need to filter that information into something that we can handle within the time we have for trading, and is profitable, of course. So that's why I asked you. That's why, for me, I don't see any reasons to do that at the moment. So that's why. But you could have a great trade plan that is geared towards maybe something like this, and could be a great idea. So that's why I asked it, because maybe you have something that would make sense, and if you explain it to me, I would say, well, you have a point. That's why. Okay, you're basing it off the fibs and divergence. Okay, gotcha. If you are using the fibs, then I would say iffy-ish, because it didn't touch. It came close to the 786. 7 pips. It was very close. That's true. Could still push a bit, maybe few lower. Divergence. Let's see. The thing is with hidden bullish divergence is that it could take a long before you really get this turn. That's especially on a 4-hour chart. So that's a bit tricky. If I look at the 15-minute world, you see this huge move down here, and I would say still one more break of this bottom is in the cards, looking at that. But the question is from where. It could make something like this and then break. And then we'll have divergence on the 15-minute world. And then maybe we'll make some upside. So also if you look at the 4-hour world here, still bullish, bearish candles. So a key would be this last 4-hour high or the 786 fib. Yeah, you see that correctly, Kaylin. There is bullish 4-hour hidden divergence if you compare this bottom with this one, but it can take long to really materialize. That's my point. So for me, because of this massive strength here, I don't see it closing and reversing immediately. So that's why it's more a time factor. It could be, a long could be good sometime soon. I know it sounds funny maybe for some of you because you see this huge down move, but the euro is different than the pound and Aussie, in my opinion, and the fact that we have not broken key support. And in that regard, even though we are moving very fast down, the likelihood of making one more up, and even if we go down from there to get that lower high, is eventually very realistic, as Kaylin said. So I like the thinking, Kaylin, first of all. That makes sense to me. It's just more the timing issue that I don't like, because I think that, personally, I think we'll still make some weak upside and then see a fall and then maybe make a wedge here or something like that, and only then maybe see the upside. Basically, I want to see more price materialize here before I'm interested. That's my opinion. Usually these things don't turn in a blink, and you get some structure like that, and then it would be interesting. Or some wedge like this, that would change things for me. Yeah, 89 moving average, that's true. What is this one? This is 144. So if that's your trend definition, Kaylin, that's great. And if you've tested and used that more often, good for you. Good for you. I don't use the 89 for trend definition personally, but that doesn't mean it doesn't work. If you tested that, that's awesome. All right, so good job there. For me, still this euro dollar, for me this is still crucial low, and any low that forms here is also crucial, just like the pound had. So that's more the issue for me. It's just such a bearish momentum that I don't see a closing reverse happening now. I see a corrective pattern building at best, or even one more fall and then a corrective pattern. Then I would be interested in upside, or even downside if it breaks that. So that's what I'm waiting for. Also the advantage of waiting, in my opinion, is just that you see how price reacts. It saves you a lot of stress to be in that trade, while it probably will not go up, as probably not go in one straight line like this, right? So it saves a lot of stress and psychology if you wait that time factor out. We had actually a webinar on time factor, by the way. Should be in the educational archive. I thought we had, yeah. So that's why. I don't have any. And if it were to make this up move, I don't really care to miss it, because most of the time it wouldn't do that. It just makes the structure, or a fall and then a structure, one of the two. So that's my reasoning. Any questions on that regarding the time factor, maybe? Anyone curious? There is a webinar, by the way, as I said, but maybe someone has something that wants to know right now. Let's see. If not, the only thing that really I liked today was maybe this EuroCAD that broke earlier last hour. Kaylin is waiting for today's webinar. Yeah, we're going to have a webinar on stop losses. Thanks for reminding me, Kaylin, to mention that actually. Let's see, that's 8.5 hours from now, or 8 hours and 23 minutes to be exact, on stop losses. It will be recorded, so. EuroCAD is the only thing that kind of piqued my interest because of the huge uptrend and something like this. You see we had a wedge here. I already talked about this EuroCAD, but just want to emphasize this wedge in an uptrend, break, interesting, back, great. Now again, correction, that could be a good break. All right. That's the only thing that really caught my attention here, to be honest. Normally I would trade it, but I don't know. I'm not really. The market moved so kind of. The FOMC was quite a big mover, so I'm a bit more cautious this morning, to be honest, just because of that. Still, even this morning, personally. All right, but this is the only good structure that I like as a break on a 1 hour chart, to be honest. The rest, all is on the move. All the currencies are on the move. For those of you, I told you about the pound Swiss yesterday. I don't know if anyone took the 50 fib, but working pretty well. We got a good fall, but moving up here. So I would move it definitely to +1, take the risk off the table, and hope for next fall 2 targets. All right. Euro dollar finally broke the top. Well, not finally, but did broke the top. Respect to those 786 and 886 fib. So always good to look at those fibs, right? But after some downside correction, nice break. So let me take off these objects quickly. So that's good. For those of you who expected a bigger correction, you see that's why it's still good to trade with the trend. As I said, last week, I said, yes, there is that possibility that we see this and then up, for example, or down, whatever. But it's definitely possible to keep on going with the trend. And that's why it's always so difficult, actually, to keep focused on trading with the trend. It is difficult because it's so natural for our brain to start seeing there are two types of traders. One that is lucky enough to have a trend at the beginning of their Forex career and trade it with the trend and make money with that. That could be quite dangerous because that's what they expect will happen always. And then when the currency stops trending and starts to make complicated corrections and structures and counter trend moves and the trend changes but doesn't go far, they lose all their money that they made in the trend at the beginning of their career. So that's dangerous. So that's the naive with the trend trader. Let me say it this way. Then you have when you reach a stage where you know more about the market and you know that the trend doesn't last forever and stuff like that. I think people naturally start to look for the fact that it could correct bigger and then lose sight of actually just the possibility of continuing with the trend. So I think a healthy balance is the best. That's what I've tried to show you on the euro and pound, how I approach it, is how I define the trend and how I want to trade it. And what I'm trying to show you is that I want to trade with the trend, but realistically. So what I'm trying to say is that when we break certain levels like this and like this, that's why I was aware that, and I have a fib on this downside. So I'm aware that, yes, this was a good correction of this massive uptrend, so we could continue. I like this break. I like the hook back. I like this break. Remember, I was looking for a hook back on this small time frame, so I missed it, but some of you took it. So good trades to the upside. I'm taking them, but I am cautious of these fibs because I know that there could be resistance for that downside. It doesn't have to be, and that's, you see, it didn't happen. We did pause at these fibs, but then we found renewed interest, renewed power, upside buying potential. We pushed up. All right. So that's what my preference is for trading, a realistic with the trend trader. All right. Now we broke the top. I'm again interested in upside. Here I was a bit cautious, and justly so, because we were at these fibs. When we made this bigger correction and you were willing to trade it during FMOC, which is always a bit risky, right? Not saying that that's an easy thing to do or recommendable, but if you did, then you did have this break here, 2 breaks actually. This trend line break like this, or if you would have done it like this, maybe even, depends how you want to draw the trend line. But anyhow, it broke and we got the break. So that justly I was not interested here, as you can see, because we were at the fibs. But after a correction, if it were, I didn't trade it because of the FMOC, but if it would be other day, I would definitely be looking for that break. Just to give you the theory. All right, so it makes sense, right? Yes, interested in the longs here, not interested in here, but interested again here. All right, so that's how you can realistically trade the trend. And if the, let's see, if we would have maybe broken this low, for example, we would have gotten price action like this, and then broken it, then I would be already considering it a downtrend, because then we have higher low, lower highs, and lower lows. All right, that's why this one would have been the key, but it's not a question because we already, we just bounced and went up, and we didn't even make a corrective bearish correction here where it was just a huge impulse. So, but that's just to show you how I would look at it regarding the definition of the trend. Okay, now in this case we broke the top, and we had actually a very, if you look at the day chart, we only had a 382.50 bounce in here, which is quite a shallow retracement. So looking good for these targets, to be honest, at the moment, which is at 144.70 and 147.70. Also, I want to put a fib on this weekly move up. And you see we paused at the 618 fib with a bearish weekly candle, but we broke above that high. So the next target is that minus 1,000, which is equal to this minus 618. So most likely we'll see some, eventually, maybe we'll hit this 272 in one shot. Eventually we'll see some correction. All right, so we'll see we'll see something like this to the target, then correction, maybe back to this broken top, bounce, and up to this 618, minus 1,000 consolidation, confluence, I should say. So what I'm looking for now is 1 hour chart to make something like this again. Very simple. That's my bread and butter trading, to be honest. 1 hour consolidations like that with the trend. That's all I need, to be honest. And I scan 15 charts, and that's how I trade personally. All right, so now you know. That's my favorite trading, plus the 4 hour AO, as I already said a few times yesterday and last week. All right, Tuesday, sorry, not last week. No, I think yesterday I said it. So let's see. That's, Kalen, what I'm looking at now. For those of you who are a bit more adventurous, we are breaking the top here. There is still some space to this target, and there's a low quite low close by, but I'm not, I don't know, not that interested in it personally, to be honest. I rather wait for that correction. We have a question here about the stochastic. The 8 and 1 and 3 I use for the euro dollar, which is breaking to the downside again. So let me take a look here. Yeah, you see we're touching the 786. As I said, there's either going to be a huge consolidation or at least one more down move, because the impulse, the move down is so powerful. And the AO here is so powerful that that is a chance of happening. The difference is that I used the 813 for the euro. That's an adjusted stochastics that Tarantula mentioned as a particular trading strategy on the 5-minute world on the euro dollar. Let's see, where is it? Here. The other one is just the standard oscillator there. All right, so that's the difference. This 813 is especially for the adjusted for the euro dollar 5-minute world here for that trade setup. That is, you can see in the webinar called scalping, okay? Scalping the market. You can see this lower time frame move up was back to the moving averages where we found resistance and pushing back. Only the stochastics here was only at 68, which is low. We want an oversold value. I don't know where I lost my lines somehow. I had horizontal lines here to indicate what the oversold was. I think here, and I don't know exactly. I would have to look at, I forgot. I would have to look at the data. Does anyone know by any chance what the levels were? I lost them somehow. So, you know, otherwise that would have been the 5-minute setup, by the way, right? That we're looking for if we would have reached the oversold area here, because there was a move back to the moving averages in a downtrend on this shorter time frame. And you can see every time the currency hooks back to the moving averages, it finds resistance. But that particular trade setup would need a oversold area. I don't think it disqualified. Does anyone have those levels by any chance? If you do, let me know. Otherwise, if we would have, this would have been a short then. Right? Would have been doing okay now. In fact, would have been up 40 pips. That's a short time, 5-minute world short. Which ties in with the analysis too that, you know, with a huge impulse like this, you usually see some continuation before you get that structure I was talking about. Actually, we're pushing through the 786 right now. But once again, I don't think this qualified. The stochastics didn't reach the overbought, sorry, the overbought, not the oversold, the overbought, of course. Didn't reach the overbought level that typically would qualify for that 5-minute trade, all right? Yeah. So that's the euro odd. What else to look at? Swissy also made a huge upside here. Let me see. New Zealand made a good fall too after break of this trend line. Those were set up pretty good with the trend, especially the Aussie. New Zealand was a bit iffy-ish, right? Because I was already saying New Zealand was iffy. I remember I was saying yesterday because of all these breaks of trend lines. So it was kind of like, you know, what is it? Is it really going to break up, or is it going to continue down? So that was iffy. But the Aussie was better, right? Euro pound. I don't know if I mentioned it yesterday, but I I don't think I did mention it, but I remember telling it to friends of mine that this AO is not back to zero line, and I want a more, I think I did say it here though, a bigger structure where I have 3 hits and this back to the zero line, and then I like to break more. You see that that's what happened. We got a false break here, right, after only 2 touches, and the AO not back to zero line, and we got a real break later on when the AO is back to zero line and we had 3 touches. This break didn't go anywhere, but it wasn't a loss at least because it moved up. No reason to keep, to keep the risk on. Definitely move it to +1 here when it's up so high because you want to see a continuation. And it would have been a break-even trade, but not a loss. I think I did mention it here, but not sure. What else to look at? EJ and pound yen didn't get the break, just like the dollar yen are actually moving to the upside. So this could be building on a bigger uptrend now. What I would want to see now is we're at this resistance line still. So I want to see a weakish downside, and then maybe the next break I could become interested. I'm really interested above these trend lines and above this orange line for that upside, to be honest. But would consider it if, depending on price action, somewhere in here as well. Same probably for the pound yen. Dollar CAD showing some reversal here, rounding, and breaking above this key orange resistance right in here. So that's moving pretty fast and is now in an uptrend. Broke above this resistance line as well here. So a break looking bullish now after we broke already this one, right? But this one was still key resistance there. So here too, I'm bullish, but looking for a pullback before trading. Same story basically. Euro is showing some weakness. That's why the Euro CAD is going down. That's why I didn't really trust this breakout. Also, if you look at the 1 hour chart, you see a pretty big wick, right? As well. Not really a strong breakout. Let's see. Pound odd. Also breaking the top. Wow. Pound New Zealand is a bit weaker. Pound odd, just like the Euro odd. Definitely same story here, all right? The odd again showing a lot of weakness against all of them. Even in New Zealand had a fall yesterday. Odd New Zealand. Right in here. Boom. Right to target. Look at this. Put a fib on this down move. 50 fib. Right to the 618 target. So really the odd across the board here weakness. The odd New Zealand at the moment, what's in a downtrend. So let me just check. My process is very simple. I trade with the trend. The only thing I want to check is if there's any major resistance that could stop it. The next major resistance is support is here, or support or resistance. Maybe, just maybe a fib. Who knows? Could be. Well, we stopped at the 618, we stopped at the 50, and we stopped at the 382. So could be. So, but that 786 is far away. So nothing major there. So nothing really, any support that could stop it. Let me fib this down move here. That target is far away as well. So no real support that could stop this trend. I mean, you can see definitely price moving down, moving back to moving average resistance. Moving down, moving back to moving average resistance. Moving back to moving averages resistance. So it's moving down now. So let's move on to the 4 hour chart. And maybe we're having some divergence. That could be the only kind of warning here. So looking good. So what I would be looking for with the trend trades again, but not here. Again, I would want to see something like this happen, and then we can make that down trade nicely. You see, down, 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 down. Nice. But now we've already made that down move. So what I would look for is a new structure like this, or this, or this, or this, or this, or this, anything like that. We're actually building a bit of it right now, but it's too small for me. All right, so if it moves back to, for example, here, move back to moving averages, and we get a break again, I would be looking for another short. All right, so that's what I would be doing for this Aussie New Zealand. That's what I mostly do for all currencies, basically. I get, a bit more cautious if there's something of a big support or major divergence on the day chart and 4-hour chart and stuff like that. We do have it a bit on the 4-hour chart, so that could be a bit alarming. So that could be, because day chart is also rounding here. Let me check the AO on the awesome oscillator. That's the only thing that's actually could give a bigger, let's see. This is one of those examples of hidden bearish divergence. There's a bit of divergence between these bottoms, but that's why we got this retrace, right? Now we're continuing, and we're actually building on the daily. So, tricky. Let me see 4-hour chart. Weekly is still building. Yeah, it could. You never know. This could be maybe a spot where we make a bigger retracement, but doesn't really matter. If we make a retracement, something like this, that's great, or even like this, and we break it, I see no reason still why not to trade it, to be honest, at the moment. If we make something of an impulse, and then like this, then there's a high likelihood of making one more impulse up, because then we're making a bigger 4-hour correction. So downtrend looking good, but only going to trade it after a pullback and continuation, and depending on price action. Dollar index approaching last week's high. And we could easily move that trend line like this to incorporate that, and it could be a bounce. Then again, it's funny that we didn't touch the 786 a bit. As I said, that would be in a way logical as well, but getting that bounce, because we are getting closer to a support area on this dollar index. But still, this weekly high important in my opinion. All right. So let's see if we break that. We could get something like this as well, by the way, a wedge. You never know. We are approaching summertime. It's going to be July, 10 days from now. We could have 2 months of a range. It's possible, especially August is known to have that effect. So if that were to happen, then I would eventually expect dollar maybe to bounce off somewhere like here to the upside, I guess. But who knows? If we get a break, it could mean a massive break as well. So, I'm just saying it would be a decision point then, maybe at the end of August. But that's really speculation. It's just pure speculation at the moment. It's still 20th of June, so the summer hasn't started yet. I think it starts 22nd, right, officially? 21st, tomorrow maybe. But anyhow, in terms of trading, I would say August is the real most difficult month. July is a bit better, of course. Alrighty. Anything you want to see? I'm not sure if I mentioned this. I was talking about this Swissies that they could break, right? The odd Swiss here breaking. I think I did anyhow. You have to forgive me. Sometimes I forget what I exactly. You probably too know what I exactly said, but all of them broke during FOMC. So that's very difficult to trade. Gold, I did talk. I'm pretty sure I talked about it, and what I was looking for was, remember, I have the fibs on here. I was looking for a 618 to target. I saw this as a downside. I said the likelihood of a continuation now to the downside is high. We've corrected so much that an impulse, is probably going to happen, but I don't think it's going to happen when we were looking at it, which was somewhere in here. I said it's going to probably move up to the 618 target, and it did to the pip. Look at that, right to the pip. That's how you can use fib retracements and targets to your advantage. It can't get more accurate than that, basically, to the pip. And, oh, sorry, still pushed a bit through. Pardon me. But anyhow, good enough for me. How much was it? Okay, it pushed $1 or not even that. 90 cents through it, and then crashed like crazy. And if we take off that fib, so that's how you can use it. Why is that so? Because this is ABC correction. And for those of you at waivers, you know what I'm talking about. But that's why the market does that. All right, that's why it doesn't break here, and that's why some traders who might think that they anticipate a break here and put their stop loss maybe here, get their stop taken, and then see it continue. That's why Elliott wave theory is, in my opinion, useful, because I'm expecting this to the 618 target and then down, which is exactly what happened. And that's why I think, personally, Elliott wave is useful. But I know that many of you don't like it. But even if you don't like it, you could have just easily drawn this trend line, to be honest, right? And wait for a break of that. And it broke here. That's fine as well, by the way. So you don't necessarily need it. And it went to targets, actually extended all the way through those targets. Let's take a look at the 4-hour chart. Maybe we should have fibbed this move actually here. That's a 618 bounce, right, to at least this target, right? So we have these orange lines. Those are resistances. We're breaking through those. Oh, wow. Woo! Big thing happening actually right now as we speak. Oh, by the way, looking at the daily highs, look at that. Today's high went exactly to, is that today? It's funny. When did that break happen then? 1 second. So that happened just last night, I guess. Last night, okay. Anyhow, that high also tying in, again, same high today as yesterday. Anyhow, what's interesting about it is that for me, this trade was just a trade up to this level, because I expected the bounce there, to be honest. I expected, this looked like no upside motion, this no power to the upside, no power, then some impulse, then correction, and then we broke, right? We broke the trend line. So that's why I said a hook back is good for that downside to this support level. But what in fact happened is that we're now breaking through this support and even this support. So that's pretty massive. And that break of that bottom was bound to happen. I've said that before. The question was when. And I still had right in here, I still had a bias that we could maybe make all the way up to 1530 and then down. But eventually, like, when we saw this, that's why price action is important. That likelihood decreased, especially after this impulse, and then again a correction. And a fall here was logical. But, you know, did expect maybe something like this and then another fall. But it's getting that impulsive that we're breaking through this massive bottom, which means we're making more downside in this gold and really getting very bearish. Let's see, 618 target is at 1250, I think. That could definitely be a bouncing area because that ties in with some support here on the left and this zone here, which is some support there, I would say. From a fundamental point of view, I read ones that 1250 is nowadays how much mine makers, how much it costs to make gold, so that could be a psychological number, 1250 as well. So, but a break of that 1320 was definitely in the cards. To 1250, I always said it is, you know, is definitely potential there, and it's happening right now. That push could be maybe, you know, to 1250 could see then a bigger correction again. Might be the end of it. I don't know, but who knows? But difficult to say now. Personally, that's what I expected. So if it pushes beyond 1250, then it even is like more bearish than I expected. Let me say it this way. I was bearish on gold and silver for a long time, ever since this fall, to be honest. Then we got this correction, and I expected the break to be right in here, actually. Right here I expected it. But eventually it took so long. I think what happened was that it took so long to break that the break didn't happen so long, because that's where I expected this fall that happened here already there in 2011. I think that couldn't break at that time. We got one more move up to this bottom, to this top, made expanded the correction bigger. But then after we got this break, like this movement here, I was big time seller. I was writing it in my column. Big time sellers here, here, here for this downside. Especially this one. I think it was, let me see, yeah. No, sorry, this one I was really writing about a lot because that fall, this one too here. This was the most impulsive fall, which means that actually in a way we could expect maybe even 2 bottom breaks to come. This is the first bottom break, and there could be one more. I didn't think about that. So it depends where we stop. If we stop at 1250, then we could see maybe one more fall. If it stops somewhere at 1280, then we could see that fall to 1250. A funny thing is that Goldman Sachs, they changed their recommendation from long and hold somewhere in here to short, and they were surprised by the speed that it fell. And I'm thinking, boy, oh boy, oh boy, what are those people doing there? They're getting big payments to do their job, and I don't know what they're doing. They're not doing it, in my opinion, with due respect. Because to me, it had downside written all over since 2011, and especially after this move here, and after this, I don't want to sound, annoying, but to me, it had downside really, I was writing about it in articles. It's public. It's on the internet there with date. It had downside written all over it to me. These corrections here going nowhere. So I don't know what they do, what tools they use to make that analysis. But to me, it was downside written all over in this piece. and especially on this week chart, I was waiting it already here, to be honest. So this, and to me, the fact that it made it fast doesn't surprise me, because when you break, when you break a huge bottom like this, there is no support left. There is nothing to support on. There's no structure, no thing to lean on. So then it's going to fall fast. All right. Well, yeah, that's the past. But so still expecting 2 bottom breaks for me. This is the first one. Let's see if that happens. The reason, Kalen, for the summer being slow is because everyone knows that everyone's on vacation, so there's just no follow-through. It's not important, but it's difficult. Sorry about that. I didn't mean, if I said important, I didn't mean it. So August in general are not important, but they are difficult. Maybe this August could be important by coincidence, just a coincidence, because the dollar index could, right, with emphasis on could, no idea, could like go towards that trend line, and that trend line might break or bounce, but that's just like coincidence. Otherwise, August is not important. But it's difficult. Why? Because the currencies in August and December, they tend to bounce up and down a lot because there is no follow-through of breakouts. So that's maybe good for ranging type of environment. Let me show you the pound dollar last year. Let's see. So this was July, but let me put lines there. This is 20th of June last year. This is, let me put, I see August moved actually a lot. This is end of July, and this is end of August. Oh, sorry. Actually, it's September more than moved. But so you can see. Let's look at it. From 20th of June to end of July is basically we have. I mean, if you zoom in on a Forex chart, you have movements, but on a day chart, you clearly see that it's kind of bouncing up and down, right? Then August, also very slow. I mean, if you're trading this in August till mid-August, no, to 20th of August, if you look at these days, there's really nothing special, right? Nothing really special there. So really 2 months of nothing special. Then finally 22nd of August, you get a break, and then in fact the big continuation is the 1st of September and onwards. Let's take a look at the previous August 2011. It's not that there would totally be no movement at all, right? Not saying that. But there's just a higher risk in my opinion. Let's see, what is this? This is 2011. So this is a pretty good rise here in July. End of June was a bit choppy-ish. August, beginning of August, definitely choppy. This is pretty choppy on a day chart. Although this had some movement here. So let me say this with and why is it tricky? Because if you are a breakout trader like me, there is less chance of a sustained breakout. There's more chances of ranging type of environment. That's why for me it's more difficult. If you're a range trader, it might be the opposite. Who knows? I don't know about that. That's just a guess. But that's why it's for me more difficult. Because I'm a breakout trader, and then the breakouts are not sustainable. Just Like, for example, if you are trading a breakout on the last day of the month on Friday, that could be very dangerous because there is no momentum in the market to push it. The psychology of that day or time frame is different. You see, you need a setting that would support the breakout. And such a setting that supports a breakout is usually where you don't have a big fundy around the corner, where you have enough liquidity, which means no public holiday, where you're not trading in Christmas, when you're not trading on in a huge summer month because everyone's gone in August, so all the big shots at banks are at the beach, and who's trading in August are the people who are replacing them, which, you know, it's just a different environment. So you need an environment that can support a breakout, and August is not optimal. It could work sometimes, sometimes doesn't. Less reliable. That's why. Alrighty, folks. Let me just take a look at this euro dollar. Pushed up a few pips, pushed down a few pips, as we see, right? What happened with my moving averages? Ah, here. Just chart, sorry. Pushed down a few pips. Let's see, 132.60. 60 pips to this 886. Looks like we're respecting the 886 here at the moment, because you can see already some of that small power here, but who knows. Let's see if we, the 1 hour chart will really tell if we get a bounce off that 886 or not. Anyone have any questions regarding a currency? I think we looked at almost all of them. Anyone want to ask something specifically regarding a currency, or why I use the tools I use, or why I analyze what I analyze, or did anyone find out the 5-minute stochastics things are? I'll take a look after our webinar otherwise. Anyone still there? Hope so. Curious where that gold is going to, and where it's gonna, how far it can go. Oh, nice, Kayla. Good job. Any questions? I guess not, because I don't see anything, but I'll just give a few seconds still, just in case anyone is typing by any chance, and maybe typing a long question. And otherwise, I guess we're going to wrap it up. Don't forget to look at the webinar tonight. That is now 7 hours and 40 minutes from now, where we're going to take a look at stop losses. And next week, Tuesday, on the 25th of June, we'll be looking at the charts again. Tuesday, Wednesday, and Thursday. All right. Let me take a look at that Euro CAD. Okay, that's great, Kamal. Awesome stuff. Glad to see you there. The Euro CAD now looking like it's actually going to really push up after it made a dip here. So we did find some support at this 1 hour low. Looks like it's going to be a sustainable break now at the moment. You're welcome, Kamal. I'm glad you enjoyed it. Very happy about that. I'm sure that some of you are not familiar with maybe this type of trading, so I hope you'll be able to learn from the way I look at it, and use that maybe some concepts to your advantage, right? To become more how do you call it, profitable. Huh? Alrighty, folks, I don't see any questions, so that will wrap it up. Yeah, great, Camel. Indeed, exactly. I think so. Personally, I view trading as discretionary. I'm a discretionary trader, and my job is to do the analysis and find the best points for trading it, which this is how I do it, basically, indeed. So I'm glad you find it meaningful. I'm sure that some would not agree, and they like to have more non-discretionary trading. And I can imagine, because it's difficult to get there, to be able to implement it successfully, discretionary trading, because it's easier to build upon very strict rules, and it gives the trading psychology more, it's easier to hang into the trading plan. It's easier to have that confidence in your trading if you have a very strict trading plan. My trading plan has definitely more accommodation of discretionary elements, maybe more than others, but for me it works. I like it. So thanks, Kemal, in any case. So going to wrap it up. I'm looking forward to seeing you, Kemal, Kamal, and tonight, and others too, and wishing Kalen, Kamal, and all of you a great trading day as well. Cheers, everyone.
The organ